Hi, this is Dustin with Dustin's Dollars. In my second stream today, I'm going to be talking about Enviva's earnings. I ran out of time earlier to talk about this. I'm coming back on today to talk about this. They have not yet reported their earnings, so this is going to be sort of an earnings preview. Some of the things that I'm looking at, some of the things I've looked at to try to get an indication of if there are going to be any surprises in their earnings, and what I'm looking for in their earnings themselves. So that is what I'm going to be covering today. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Enviva, so this video should be for your entertainment purposes only. Because I could be wrong about everything I say in this video, you need to do your own research before making any investment decisions. Okay, so Enviva, I am back. Hi, Transient Stacker. So I ran out of time earlier to talk about Enviva. I'm going to talk about it now. I'm able to hop back on. So they are going to report earnings this week on November 9th. That'll be last Thursday in the morning, Eastern U.S. time. And so I wanted to talk through a couple things here. Now, one thing I figured it'd be good to look at before we start looking at 2023 is to look at the 2022 Q3 results. So if you've looked at this before, this was a year ago, so this is what they're going to be compared on, year over year. They had adjusted EBITDA in 3Q of 2022 of $60.6 million. And then they had this distributable cash flow at the time they were still paying the dividend of about $36 million. And so that's just kind of the base. I'm not going to go in any details on 1 year ago, but I am going to note that as an anchor point when we also look at their 2023. And so this is their 2023 guidance that they just gave after Q2, right? So this was, you can even see in the name of the presentation, this is from August 4th of this year, so fairly recent. Their guidance for EBITDA is adjusted EBITDA in Q3 was $70 million, and really that was a range from 60 to 80. I'm not sure precisely where that's at in this presentation, but I'm fairly sure it's 60 to 80 guidance for Q3. And they did walk through, and so right off the bat you can quickly see if they hit the low end of that range, this is going to look flat year over year, right? Again, a year ago they reported actual adjusted EBITDA of $60.6 million. So year over year, if they hit the low end of that 60 to 80 range, then that is going to be flat year over year in terms of adjusted EBITDA. One other thing to I would say is something whenever you're looking at a company's metrics and they report anything that's adjusted, it's really good to dig in and see, okay, what are you adjusting out, right? If they talk about GAAP, any GAAP measurements, we have a pretty good understanding what that means. But in terms of their adjusted EBITDA, let's take a look at what they are pulling out of that. And so this is so here's their range for adjusted EBITDA. So I was right, it was 60 to 80. This is, again, their 3 months ending September 30th. So this is their guidance. And this is because they have range on what they expect to get for revenue that sort of flows down through their estimated net income, and really in this case it's a net loss. So their adjustments here: depreciation, amortization. I agree with that. Now interest expense, right? And so of course we're doing EBITDA, so before interest, sure. But that number is going to come in handy in just a second when we start talking about sort of free cash flow and think about that. They also have the interest expense on repurchase accounting. I have a whole video on this from months ago. It's a complex thing as far as I understand, if I recall correctly. I haven't looked into the details recently, but if I recall, I don't think that there's actual cash changing hands. This is an accounting paper item only, so it makes sense to me that they would be excluding this as well. Now they also have stock-based compensation. This is a common one, non-cash equity-based compensation expense. They're still projecting $10 million of that in Q3, and actually $10 million in Q4. Right? They actually have guidance for Q3 and Q4 side by side here, which I'm not going to go through. But if you look at that, sure, they're going to adjust out about EBITDA. It's not a cash item, but I personally add this back in whenever, or I include this when I'm doing my own measure of EBITDA, because if they weren't paying these people in stock, they'd pay them something else, right? That's kind of the point. They're paying them stock because this is a part of what they are getting for their compensation. So I personally would actually kind of subtract that off. And now it might be interesting. I didn't look at this when I was initially putting together my notes for the stream. It would be interesting to see a year ago, 3 months ended. Yeah, so they actually had Where's their adjusted EBITDA? Similar equity-based compensation. This is 3 months ended September 30th. So that would be pretty much flat year over year. Same. So again, their guidance was basically the bottom end of their guidance range was flat year over year. Even if you look at the equity-based compensation, that's almost the same, almost exactly the same. But then they also have, cash-based restructuring inclusive of severance. And so I think these things I am willing, for me personally, the way I'm valuing the company on sort of a going forward basis. Yeah, I don't think they're going to have this for, on a going forward basis. So it makes sense to me that they would exclude this. So we've kind of got our range here. And now if I was looking at, in terms of trying to look at price to free cash flow, because I guess maybe I should back up one step and say I don't want to be too much of a broken record, but I've made a couple of videos where I'm putting forth my viewpoint that on a price to free cash flow basis, company just criminally undervalued. And so if I look at their guidance here, let's take the bottom end of that range, say 60, and let's say most people are going to not give them credit for equity-based compensation being excluded. So let's call it 50 in EBITDA. And if I'm looking, I want to look at, free cash flow. I then want to also subtract off the interest expense, $20 million. So now we're down to, and again, this is, I'm mixing up things. So this is my made up Dustin sort of pseudo free cash flow metric, because I did subtract off the, share-based compensation from this and trying to get an estimate of their free cash flow. But I think a lot of investors are going to, however they value it, are going to subtract out stock-based compensation, or they're going to count it as a negative on the company, whether it's in the actual, their measure of profitability or in their measure of something to account for dilution. And so if I get down to it, that might be something closer to $30 million in, sort of free cash flow. And then you also have to count for maintenance CapEx, right? Because I think if we're looking at the company, it's totally not fair to say, hey, they're not making any money. They're not a profitable company. If you're looking at what they're spending in order to, I guess maybe this is the better slide to go through. If they're spending to build these new plants, the new plant in Alabama, in Alabama here, in Mississippi here, of course they're going to have CapEx for that. Of course that's going to be more than the money they're making, right? They are not right now at a point where they can self-sustain all of that, CapEx spend. We know, hopefully everybody who's invested in the company or who's looked in the company understands that. But if I'm trying to get sort of a rough valuation that I can then, look at those CapEx expansion projects kind of separately and just get a base valuation for their general operations, I want to know what is their rough free cash flow from that. So they do guide for maintenance CapEx for the year of $20 million, right? That number is right here. Our maintenance CapEx guidance is $20 million, low maintenance CapEx. And they break it out where they say, in total, we expect 335 to 365 CapEx for the year. And I'm going to talk about that in a minute, hopefully, if I don't forget. But the maintenance portion of that, the stuff that we just need to do to upkeep our current operations, is very, very low. It's a very small portion, $20 million per year. And so let's assume that's equally distributed across all of the quarters. So 20 divided by 4, that's 5. So now we look at it and we say, great, in Q3, sort of this rough measure of free cash flow might only be $25 million. And so that's if they meet the bottom end of the range and there's no other major surprises here. And this, when you also look at what do they do in, Q1 and Q2, and I think they were probably flat or even negative. I don't have the numbers right at hand. I guess I could look at it very, very briefly and say, that their EBITDA was very low. They're going to have share-based compensation, and they're going to have interest expense of, roughly $40 million on top of this. So they were negative in terms of my, if they had share-based compensation, which I don't have off the top of my head, but if they, I guess I could probably look at it right here and give you an even better answer rather than speculating. 6 month ended June 30th. That's their adjusted net loss. Where's their share-based compensation? Where's their adjusted EBITDA? Here we go. So total interest expense, 6 months ended June 30th would be right here. Well, sorry. So that's $92 million, but they did actually, they paid down some of the debt when they made the equity transaction. So that's not really realistic on a going forward basis, because they paid down some of that stuff. But if we still are looking at, equity compensation, stock-based comp. They had $33 million of that. So, if I was looking at my sort of metric of profitability, it would look like they're actually not profitable. Like they're losing money on a, again, I don't have a name for it, adjusted cash flow basis. There's probably some accounting term for the metric that I'm making up. But, if I was only looking at first 2 quarters, they're negative, and then Q3, they're going to be better, maybe $25 million, but maybe the trailing 9 months here, that the year to date, is still going to look negative or even flat. And so this is something that I've talked to a couple folks about where, it kind of comes down to how are you valuing the company. If you look at this, and especially if you're looking at a trailing 12 months basis, where in I think it was, Q4 of last year, I believe was when they had that deferred gross margin transaction. And that really, because I guess this would be the Q3 report. Do they have the deferred gross margin thing in here? I don't believe that they did, right? They talked about things being recast from when they did the conversion to their current corporate structure out of a partnership, but they didn't do the deferred gross margin transaction. That was in Q4 of last year. So Q4 of last year looks awful, but there's some weirdness for that. Again, I have a prior video talking about that. And I'm getting my point, I promise. But my point is, Q4 of last year didn't look good because of some accounting stuff. The trailing 9 months, right, that would be added on to Q4 of last year if you want to now get your trailing 12 months after the report comes out on Thursday, it's only going to get, let's say, roughly $25 million credit for sort of profit in Q3 of this year, add on Q1 and Q2, and that's going to kind of probably subtract that off, and it's going to look bad. However, this is, in my opinion, is where the opportunity really comes in, because I think this is it's a mischaracterization of how their operation is going to be going forward. And so this gets to, if I were going to annualize this and say, well, they're doing better now. Oh, this is the earnings transcript. It closed on me. It didn't save my spot. But if I just look at the valuation right now. So let's go to Enviva. It'll open up and you can see, again, as I've mentioned before, the market value of their equity, $343 million. Q4 is going to be a more representative quarter. Q4 is going to be much better. They're going to have $25 million of profit. I think Q4 it's going to be a lot higher. Their guidance for Q4 is wrong presentation. Is much higher, right? They expect 70 the midpoint in Q3 and then 130 in Q4. That's where things are going to start to look a lot better. Once Q4 comes out, which we won't see until next year, the actual results get reported. That's going to look better. But I think my overall point is that even on trailing 12 months basis after Q3 might not look so great. Okay, so I'm still, even at that point, I don't think it's going to look great, but I think they're going to be massively undervalued relative to their actual cash flow potential. And, even if we were to look at this, let's say Q4 is real good. Let's say they make, I'm throwing out the ballpark, this is 25, add on 60, call that 85. Roughly for the, subtract off, let's say 30 for Q1 and Q2, $80 million in free cash flow roughly for the year. Even at that, and this is a very, very, this does not assume that any of the improvements they make that show up in Q3 and Q4 carry forward, right? Because Q1 and Q2 look a lot worse than Q3 and Q4 because of the improvements they've made throughout this year, or that we assume they're going to make throughout this year. 343 over 80. That's only a 4 price to free cash flow. Probably the most stringent measure of profitability that you can make. This is again like sort of adjusted downward free cash flow, and even that I think is an underestimate for the reason I just talked about, the operational improvements they're making. And so that's my thesis. I'm really trying to figure out why is the price so low. And so I looked at a couple things. I found there is at least some data. I've been trying to find this. There's some data that the EIA reports on wood pellets. And this is not specific to Enviva, but it is the overall market, right? They have this monthly densified biomass fuel report. And unfortunately, it's lagged. They have data through August. But that is helpful because we're looking for Q4, and they have July and August, right? Two months of... Sorry, we're looking for Q3. And they have 2 months of Q3 already in here. Sorry, I see some comments from James. Hi, James. What are your thoughts about what drove the poor performance of existing plants in recent quarters? Management cited overtime contract labor plant maintenance, looking for improvement in Q3 for plant performance. Yes, 100%. So I had a couple things that I could go ahead and jump to that since you're asking about it. So I mean, I guess in terms of your thoughts, I don't have any more insight than what management really detailed on the call, but it makes sense, right? And they even, here is the thing, and I think I've talked about this in the past. I have the earnings transcript up right here because I was going to talk. Where I had a section already highlighted, and I forget what it was going to be. So I don't always take the best notes here. But they talked about dryers. They were very specific, and I said this where if you really listen to this, it's clear from a couple things. Number one, where the actual CEO says, "I'm overseeing this. This is my number one priority." I guess I don't know if he said it in those words that it was his number one priority, but it was very clear that he is involved. I think he said he was personally taking this over, and seeing to it. I'm trying to see if I can find his words here. I personally took over the leadership of our operations team, and we have since made a number of important changes, start regaining the ground needed, to get to the level of profitability that they've demonstrated possible, right? And so this is actually a big part of my thesis. I'm going to talk about this just for a second. To me, they were very clear that their costs got too high, right? And they kind of just said, we've done better in the past on our costs. We just didn't do a good job. This is similar. And I don't like to talk about large tech companies very much because I work at one, and so I don't really want to have any conflicts of interest. But this is no insider information here. Like if you look at top tech companies, and they basically said, our costs are growing faster than our profits, or growing faster than our revenue, and we needed changes. And it was very well within their control, right? The problem was within the company. The problem wasn't the market. The problem wasn't something that is outside their control. It was just right there, and they just said, we overhired. We're gonna do some layoffs. We're gonna fix that. And so now we've said now our costs are in line with our profits, or they're in line with our revenues. I think this is very clear where they're saying we've demonstrated that we can operate at this cost level in the past. We just weren't disciplined, right? We didn't actually do it. And so this to me is a very, very big part of why I think the risk is actually low, because the improvements they need to make, right, to get back to the similar levels of profitability for the future, is right there within their control. And they're even showing, again, we don't really see the results. We kind of do. And talking about, like, of course you want to see the results, but by the time the results are slapping you in the face in terms of, oh, hey, I see the Q3, the Q4 cost numbers are this much lower, presumably it's going to be reflected in the market price by that point. But they did give you this early indication where they said, look, we specifically have been focused on it since March or April, whenever we really started focusing on this thing. And we've got it so that we had our lowest cost, delivered at port cost in June. And we can explain to you why that is, right? We've been focused on it. We made improvements, and they were very, I don't know enough of the details, and I'm going to talk about this in a minute with some of the EIA data, where they said that we had this decrease in fiber costs of $6 per metric ton since March. They've hedged energy inputs, and again, I actually don't think energy. I think if you're the James that I think you are, you and I have exchanged some message about this, and I think the energy just went down by itself. So I'm not sure that hedges are really to attribute too much of this, but and they even said it benefited from reducing contract labor forces. So this is all my real point. These things are within their control, right? They say we are doing a better job of procuring the wood, right? We've looked into it. We've got better strategies. They talked about this a little bit on the call, but yes, a lot of it they called out as contracted labor force, where they said, hey, we just weren't really paying a lot of attention to this. We were kind of just, and you saw some of the some departures from the company, I think shortly after this earnings, either right around the time of or shortly after this earnings call came out, where they said, hey, we didn't really do great. And you can even see this, like I personally took over the leadership. This is me speculating, but you can see when the CEO takes over leadership and sees somebody didn't do a good job, and then not too long after you see, like I think it was an EVP or an SVP, somebody high up enough that had to be filed in an 8K leave the company, that kind of says, we figured out that's a person who wasn't doing a good job. You're gone. I'm now focused on it. We're going to make sure this gets better. And he said we've got this plan that's intended to, they're reducing SG&A costs and they're also reducing operating costs, right? And sorry, I know this is a pretty long-winded way of saying it, but they're also talking about very, very tangible things. That's what makes me go even further from the, hey, theoretically, like this seems like something they ought to be able to fix, right? That it's within their control, that they're actually doing something about it. And I believe that what they're doing is meaningful. You know, they talked about specific challenges at specific plants, right? And so they say, you know, this one plant in Southampton has been operating unprofitably. And, you know, so they change the way they're operating. They say, hey, we're only running with one of the 2 dryers. And so, you know, that reduces the capacity. So they're only able to produce 65% as much, but it's at a much lower cost, right? And so these are very, very specific things, which, again, this is one of the things I'm looking for in Q3 when they report, to hear what do they say. Okay, great. They said this is going to give them some time, right? They said this gives us time to fix the underlying asset issues and figure out what we're going to do with this plant. And so I'm looking forward in Q3 for them to give an update on this. You know, obviously I won't be, I shouldn't say obviously, but I highly doubt I'll get to ask a question on the call. Hopefully someone else will ask about it. Hopefully they'll even just volunteer this information in their opening remarks. You know, but they talked about this. They talked about another plant, right? They said, hey, at this one plant in Greenwood, we have a better fiber procurement strategy. And I assume that's what is coming through on this, you know, presentation where they're saying, look, we've decreased our costs for fiber. Anyways, so they do have some indications here. It's quantitatively showing up in their metrics they reported for June. And then they had very tangible things that they're doing in the earnings call in order to actually reduce that cost basis. So that's, to me, seems like it is in their control, and then they actually have a tangible plan to make that happen. So that is a big part of my thesis, where I don't think the risk is actually as bad as people. It's not as bad as the market is making out to seem. That's my opinion. You know, we'll see. I could be wrong. Maybe they're actually incompetent. Maybe for whatever reason they're not able to make these changes, and you know, Q3 is going to come in worse in terms of a, you know, EBITDA basis because their costs still remain high. The one funny thing here, you do actually see fixed costs, right? And you see this bar of fixed costs go down. You see that the wood procurement goes down, the fixed costs goes down from, you know, April, May into June. And I was a little surprised to see, like, well, why are your fixed costs going down? I think that you know, if you said, hey, it was fiber, that makes sense. That's the brown. And then labor, I would think that's a variable cost. But if I read in the footnotes here, fixed cost, this might be too small for you to read, but I'll read out loud. Fixed costs include other production, equipment leasing, repairs, wages, benefits, contract labor, and indirect overhead, right? And so they include the contract labor here in fixed costs. I'm not sure why that is. To me, labor doesn't seem like a fixed cost, but it is here. And so that, you know, this is some indication they did actually show an improvement in that, you know, month over month at least. So cool. I got the thumbs up. Thanks. So hopefully that, you know, gave you some insight into what I'm thinking here. All right, so again, to me, it just seems like the market is massively underpricing the company. I think there's significant upside and not a whole lot of downside risk there's still downside risk, right? I don't ever want to say that. But the way that I sort of calculate, I think the upside is there's more upside than downside, you know, possible in the stock when I look at the risks and evaluate it. But I keep trying to answer for myself why, right? What am I missing, right? Because I've been in this situation before and have been proven wrong. I really think Enviva has a good spot to move forward from. But I keep wondering, what am I missing? One of the things is I wasn't really sure. Maybe there's a bad, you know, maybe the market for wood pellets is doing poorly. Maybe the cost of fiber of this wood are going up a lot, and it's just not obvious to me. So this was actually very, very helpful to be able to read this. Is what I'm getting at. The EIA has this monthly densified biomass fuel report. And there's a couple things in here that give me an early indication for Q3 even, that I don't think there's really any surprises. So I'm going to go through these very, very briefly. So real quick in table 3, right? So I think they actually have sort of a summary page, but I want to look at the actual data, the month-by-month data. So this talks about feedstocks and average cost per ton for manufacturing densified biomass products, right? And so this is 2023. This is this year's data. And so what I'm looking at here, I think most of Enviva's input comes from what would be this sort of left column here, roundwood and pulpwood. I could be wrong, but I think this is what's represented, right? The other ones are sawmill residuals, wood product manufacturing residuals. if I'm understanding this correctly, these two columns here would be things that they've already gotten the actual logs from, from the trees, taken to a sawmill, and then they're getting logs, and they've got some leftovers from there. But I think Enviva mostly gets the leftovers actually at the forest themselves, right? They talk about they take all the branches and the leaves and that sort of stuff. All the stuff that's left over that's not suitable to send to the sawmill, if I understand correctly. So I think this is where at least the bulk of their cost would come from, is from this roundwood or pulpwood, if I'm understanding correctly. And so what I was looking at here was, what is their month-by-month cost? What has it been in the past? And for July and August, is there some surprise? Is there some massive uptick in the cost for those? And if you scan over the numbers, I don't have any real math here. I'm just trying to look for anomalies. And you look over the numbers, it starts out in 32, and then all the rest of these numbers are right around 30. And even in Q2, it did drop a bit. And so the one thing I was going to say, I was going to tie this back to what the company reported. They said in June, we had lower fiber costs. And partially they're saying, well, that's part of our strategy. But I think partially the cost overall just kind of were at a minimum in June. Granted, this was a fairly small drop, because it didn't drop that much from May to June. Only, what's that, 1% or so, if I'm roughly 1%, and so clearly the amount did go down that they're paying from May to June. So I don't want to take away from, but that helped them out in having a lower cost of wood in June. But if you look at this in July and August, the 2 months that we have that would go into Q3's results, these numbers are not any higher. These are still fairly low, certainly even below the average they've had year to date. And so in terms of input costs, I can't see where this is really some sort of a red flag where maybe their profitability is going to be way down due to this. So that to me is at least one vote of confidence towards one risk factor that I didn't really know how to resolve, being gone. Another one here, look at production. And this is for the overall, for all of the U.S., if I understand correctly. And so this isn't great. However, we can look at, I think Enviva is in the South, right? This is split out by region. And this is also split out by premium standard wood pellets versus utility. I'm fairly sure that what Enviva produces is utility. And especially if you just look at the volumes here, Enviva produces over, a million metric tons per quarter. They're around 1.3 or so. I think right now I think that's what they did in Q2. I think maybe they're guiding a tad bit more in Q3. And you look at this, and none of these other categories come anywhere close to, a million per quarter. So almost certainly this utility wood pellets in the South region includes Enviva. It includes other producers as well, right? Because we're talking in, Q2, that would be, I'm ballparking it here, 2.2 to 2.5 million US tons. They do most of Enviva reports in metric tons, so there's a bit of a conversion there. It's about 10% off, but clearly Enviva's not all of this, but they are probably about half, so somewhere in that vicinity. So they're a very large portion. But anyways, the point that I was looking at here is, was there some massive drop in production that indicated some issue? And I mean, not really, right? So if I'm looking at this, they're all in the 700,000 range every month of this year. And so, Enviva is only one producer of many, but I mean, they are a large portion of this volume. So I think if there was some big problem where they didn't produce, where they were down 20, 30, 40%, I think it would almost have to show up in these numbers, and it doesn't. So that, to me, that indicates their volumes are fine. Or at least we have one vote of confidence in that direction, right? Now, one more table that I want to look at is export sales. So this is interesting. They talk about how much got exported per month. And because Enviva, I think, exports nearly all of the pellets they produced. I don't think it's 100%, but I think it's substantially all of them. And then they talk about the sale price, right? The average price, US dollars per ton. And again, I'm looking for anomalies here. And these numbers aren't like highs. It's not, June was the highest in terms of dollar per ton and above 200. But July and August were 182 and 194, right? And so those look clearly in the middle of the range, or maybe 182 is, maybe that's just slightly the lowest for the year, but 194 is certainly not. That's, in the middle, maybe it's slightly above. Actually, that's certainly above the median here. And so I just look at these numbers, and none of them seem like red flags to me. I did notice in July the quantity looked lower, right? That the prior 2 months were 800,000, 700,000 something. July was 600,000 something. But there were some months earlier in the year that were only 500,000. And so clearly this looks pretty lumpy. And again, this is multiple producers, not just Enviva. And so nothing really sticks out to me. And so this gives me even more, it leaves me wondering of what am I getting wrong, right? Why is the market really valuing Enviva so low? Because I can't find it, right? This is just more data showing things seem like they're kind of okay. And by kind of okay, I just mean like they should revert back to the mean in terms of their valuation. So that's what I'm looking at here and how I'm interpreting that data. Let me know if you know of other data that sort of conflicts with this or confirms it, or if you have if you have some other interpretation here that makes sense, let me know. The only other thing I had to talk about was what I am actually looking for in their Q3. I'm looking pretty closely to see, was June an anomaly, or are were the months in Q3? I'm sure they'll report on this. They made a big deal about it. So we're going to see the numbers, whether they're good or bad. I hope if they don't show the numbers, you can assume that they're bad. And that'll come out in the actual 10Q. But we look at this, and I'm fairly sure they're going to report these, and so I'm looking to see what was their delivered at port cost. If not monthly, then at least for the quarter. What were the different components? So I actually opened this up in a graphic program and got the numbers myself in terms of how big are these bars. And so you can kind of do that yourself if you want to look and see. But I mean, it doesn't actually give you that much more information. Visually, you can just see what their major costs are. And I want to see the increased production from these expansions, right? So they talked about doing some expansions here. They talked about actually keeping the plants. I believe it's in, was it North Carolina or South Carolina? I don't know how to pronounce it. Ahoskie. Sorry, I don't know if that's the right way to do it. But they talked about keeping this one offline for a little bit longer so that they could so that they could do it. I want to hear an update on that. And so maybe we won't necessarily see the increased production unless they're able to get that back online by the end of the quarter. Maybe they'd have that for September's numbers. But I want to hear them say, cool, we finished this, or we're about to finish it, and we expect this much more production. Because they were, I don't think they actually went through all those numbers. They were a little bit vague on what the impact of that is going to be. They did talk about how much they're going to have from some of these expansions, but they're not very specific. Well, and I guess they didn't even call it out here. They said TBD on what is the capacity addition, but they said they're going to do that. I do want to hear an update on that Southampton plant where they said, hey, we've cut the capacity. It's only at 65% of what it used to be producing because we're able to get a much lower cost basis out of that. I want to hear what their plan is going forward. I want to hear an update on how the EPS, whatever the plant is there in Alabama, in terms of is that on track? When do they think that's going to start producing? If they could even give some update on how much CapEx is left, how much have they actually put into it? Because I don't think that they split that out by plant anywhere that I can see. They do still, they were forecasting mid 24. Is that still the case? Those are things that are very important because I think that, in terms of the additional growth we're going to have for the company, if they can make it through to that point and start delivering from there, we really ought to see that in their EBITDA in a year from now, Q3 of 2024. And so I would like to hear a bit about the Mississippi plant. The bond. It's a very confusing name. But the Mississippi plant. They talked about they're going to make a decision on this probably in Q1. I want to hear how they're thinking about that right now. They were kind of non-committal last quarter. The earnings transcript, they're probably going to be non-committal again because they still have that time. But it'd be interesting to hear what they say. And then, I'd love to hear a question and see what they have to say and see what they report. Frankly, that's one of the first things to look at just because it's, I don't know if they'll highlight it. If they bought back any stock, they did authorize that buyback program. They previously said they didn't intend to use it, but I'm sure they didn't intend for the stock to go down and down and down into the fours. I think maybe when they said that was, I guess I'm not quite sure when that was. I think that was right. That was when they announced the dividend cut too, right? They said, well, we're going to cut the dividend. We might buy some. But that's, that's another thing I really want to hear about. And because, at this low price, that could make a little money could go a very, very long way. All right. One more comment. That's actually everything that I think I had notes for. And this is longer than I thought I was going to take to go through. But I guess we, had at least a little couple questions. Chris asks, what's your thoughts on the class action lawsuit? So I think the class action lawsuit is one of these, it's just one of those standard like investor things, right? Like I don't actually know. I'm gonna be honest and say I haven't looked into it because I read the headline on it and didn't think it was a big deal. Where is so I don't have a strong opinion. Enviva class action lawsuit. Let me double check and make sure that I'm not speaking saying something wrong. So I assume this is gonna be it. To represent the purchasers or acquirers of Enviva common stock. Yeah. And violations of this thing. So they made misleading statements, failed to disclose material information. These, I don't know that much about these things. In general, I've seen these before in companies. I've been invested in companies where they have these before. I've never seen them materialize in anything, unless there's some, like, obviously if there's some like, hey, FTX, Sam Bankman-Fried falsified, like used customer funds and did something very, very horrible. And I know that that's a bit different, but like, unless there's some fraud, something that's very blatant, I have never seen one of these turn into anything. I've seen this all in so many stocks when they drop quickly. It seems like there's just these law firms that, I don't know. I guess they find somebody to be the lead plaintiff, and then they say, hey, we're filing this class action lawsuit on behalf of all the shareholders. And like, what does this even mean? They allege that, they revised their guidance down. Like, yeah, this happens. I don't know. This is a little ridiculous in my opinion. I mean, I'm sure the legal system is what it is. They have their rights. But I'm not worried about it if this is what it is, unless I'm missing something. If this is the class action you're talking about, I really don't think this is going to be much of anything. I think this is pretty, like I say, I'm not going to say standard, but I've seen this in multiple companies where the things fell, where the stock fell quite a bit. I've never seen it turn into anything. I don't know. Maybe they settle out of court for a little bit of money and I just never hear about it. I mean, clearly somebody must get money out of sometimes. Otherwise, these law firms wouldn't waste their time on it. But I haven't seen anything to me, like, again, not a lawyer, not a financial professional, so I could be totally misinformed, but I've never seen anything that sort of passes my common sense test of, the company having some wrongdoing, so I'm not worried about it. James, hopefully answer your question, Chris. James says, like to hear about progress on new markets like Poland, EU ruling on woody biomass. Oh yeah, sorry, I think I touched on it on my last stream. I tried to look up the Renewable Energy Directive, the final text. I wonder if there's been anything new since then. I haven't checked in the past week or 2 weeks. But yeah, I would love to hear the company actually say, somebody who is not just like trying to figure things out, and somebody who's actually on top of it, has lawyers that are right there and know what's going on. Absolutely. That's actually a really big thing. That's a great point that I forgot to even mention. But you're totally right that's something I'm very much hearing for, because that is another big, huge tailwind that we have here, right? That they talk about in the EU, when you include the carbon cost, wood pellets are cheap, very cheap compared to all these things. And again, the actual price of these is going to fluctuate up or down, but I actually think it's not even just the price; it's also even the risk, right? Because if I'm making a plan for fuel for years long time period, and I'm looking at what is my cost going to be, right? What are my risks here? Of course, I have the risk of the cost of the fuel itself, but on top of that, I have the risk of the cost of carbon. And if I were planning a business and wanted to look at my profitability, I would not want to be at the whims of what is the cost of carbon going to be, because at least the cost of carbon is set by, the parameters that are set by government. If they want to decide that the cost of carbon, they want to discourage use of carbon and emissions of carbon, and they say, actually we're passing a law starting January 1st of 2024, the cost of carbon is going to double. or putting an additional tax on top of whatever the trading price is. I guess I don't know if these trade or if they just set a fixed price on these. I think they trade. I think I found a chart of this, but they could artificially inflate this, right? This is something that only exists, right? The carbon is something that doesn't actually have a monetary cost. Only it's imposed by government and systems, and they can arbitrarily decide that it's going to cost more. So to me, if I had the choice between something that has a zero carbon cost and something that has these, and this carries, I guess my point is, the carbon is an additional commodity that has its own risk and pricing. And so if that's one of my input costs, because I'm relying on one of these other fuels, that's scary. And that's something that I would at least I would strongly take into consideration when I'm choosing fuel. And so yes, getting an update on the EU, how they're designating the wood pellets would be great for them to come out with this. Especially the timing is, they were supposed to have finalized this in October. I couldn't definitively tell whether they did or not. The EU, that is, and so the company coming out and make a statement would be on their earnings call or just on the earnings release would be great. So, all right, that was everything I had to go through. I don't know if there's any other questions or comments on the chat. If not, I am probably gonna hop off. Took a lot longer than what I was planning, but hopefully y'all got some good value out of that, some information. Hopefully you enjoyed it. There's some good comments on here. Thank you, James and Chris and Transient Stack. I don't know if you're still here, but I saw you were here way early, and it's good to see you. All right, I am not seeing anything else on the stream. I think I mentioned earlier, if you were watching that one, I'm going to try to do streams on Sundays. If you have other questions, comments, whatever about Enviva or other stuff, feel free to leave them in the comments. I read all my comments. You can also reach out on email. I have my email, should be in my YouTube about page or profile or whatever it is. Feel free to email me. We'll chat. I'm gonna try to stream on Sundays, kind of like I did today. Probably on the earlier side when I did my earlier stream in the mid-afternoon, late afternoon in Eastern U.S. time. That I'm trying to keep to that schedule. So, all right, I'm gonna hop off then because I don't see you in the chat. Thank you very much, y'all. Have a good one.